Past the top of the hour, definitely welcome back. Catherine Simaloi is on the sign language docket. I'm Willie Stanley Nyuringita. Now, the United Nations last year proclaimed that 2025 will be the second International Year of Cooperatives after 2012. Now, this definitely means that this year is big on matters cooperatives, and we're definitely glad to be joined by Peter Njuguna, who is a Chief Executive Officer for Sacco Society's Regulatory Authority, that is SASRA. Karibu sana.
Thank you.
Yes, so even before we begin this conversation, it would be prudent to take stock of Saccos in the country.
Kipkelion in Kericho County is where Kenya's Sacco history begins. In 1908, the first ever cooperative, Lumbwa Cooperative Society, was formed by white settlers to market their dairy products. The lack of cooperative legislation at the time saw Lumbwa being registered under the Business Practices Ordinance as legislated in Great Britain, which was later adopted in India and practiced in Kenya. This inaugural cooperative set the stage for more cooperatives being formed across the country, as well as the colonial government seeing the need to legislate the cooperatives, with the first cooperative ordinance being enacted in 1931. 15 years later, the colonial government began involving Africans in the cooperatives, this resulting in the enactment of a new Cooperative Societies Ordinance. In the post-colonial government, the need to consolidate cooperative activities saw President Jomo Kenyatta's regime first draft the Government Cooperative Development Policy in 1970, and later reviewed it in 1975 in the sessional paper number 14 of that year. These milestones have seen Kenya get recognition globally, the most memorable being in July 2013, when World Council of Credit Unions recognized Kenya Saccos as the fastest growing subsector in the world. The presence of the global union was also felt last year when African and US credit union leaders that included WOCCU President and CEO Elisa Makata, Labode, and World Wide Foundation for Credit Unions Board Chair Bill Cheney make a courtesy call to President William Ruto at State House, Nairobi.
Right, now that we've understood the history and evolution and achievements of Saccos, let's dive into what really is a Sacco so that you can really understand. This data is according to the Sacco Supervision Annual Report 2023. First off, what is a Sacco? A Sacco is a special type of cooperative offering to you financial services with a primary focus on mobilization of funds and provision of affordable credit to its members who are both the owners and the users. There are two types of Saccos here. They're the deposit-taking Saccos as well as the non-withdrawable taking Saccos, or preferably NWDT. Let's start off with the first one, the deposit-taking Saccos. So they take deposits and they offer to you saving accounts. For the second one, the non-withdrawable deposit-taking Saccos, they are specified non-deposit taking business, diaspora as well as virtual based. That's the first cluster of the NWDT, and they have deposits above 100 million Kenyan shillings. For the second cluster of the NWDT, they are non-specified deposit taking business. For this, they have a deposit below 100 million Kenyan shillings. There are quite a number of cooperatives. I'm pretty sure you've heard of them. Let's list for you a number of the most common example of cooperatives. So first off, housing cooperatives and the investments, transport, quite a majority of them in the country, consumer cooperatives, as well as marketing/production. This is according to the Sacco Supervision Annual Report 2023. Let's take a look at, as per 2023, the number of registered Saccos, and we'll be getting to understand more of this with the CEO of SASRA. In 2022, about 359 registered Saccos. Now, this decreased by just 2 of the Saccos. In 2023, about 357 registered Saccos. So this is both for the DT as well as the NWDT Saccos. Let's get to know, are you a member of a Sacco? Are you not a member of a Sacco? Let's see where you fall in the past 2 for 2022 as well as 2023. So in 2022, there are about 6.42 million members in the registered Saccos. Now, this increased about 0.6. So in 2023, about 6.48 million members. Let's take a look at the loans for both the 2023 as well as 2022, just to see how this progression has been made in both years. In 2022, the loans for all these particular Saccos was 680.35 billion Kenyan shillings. This definitely increased in 2023 to 758.57 billion Kenyan shillings for the whole loans that were dispersed to the members registered. From the loans, let's take a look at the assets controlled, and here we take a look at which Saccos are actually doing good. And according to the Sacco Supervision Annual Report, shows that about 53 regulated Saccos do control, and at that time, by 2023, controlled 73.34% of the total assets. So the share of about 26.66% was shared between 304 regulated Saccos. From the assets control, let's take a look at, for these Saccos that I have told you, we take a look at the kind of cluster and how even SASRA as an authority clusters them all together. So first off, they have what they call the large tiered Saccos. So for this, the total assets are in excess of 5 billion Kenyan shillings. Then there's the mid-tiered Saccos. The total assets range between 1 billion and 5 billion Kenyan shillings. And then there's the small tiered Saccos. The total assets are below 1 billion Kenyan shillings threshold. And one of the biggest questions that you're going to have right now is, where does my Sacco, the one that I belong to, where does it range? You can take a look at the kind of assets that it has and then range it all together. Now, for these Saccos that we have definitely mentioned, let's take a look at the kind of deposits they do control. We had taken a look at the assets. Now, for the deposits, 39 regulated Saccos control 65.27% of the whole total deposits. Now, out of the 65.27%, what is remaining is 34.73%. This is shared between 318 regulated Saccos. So finally, one of the biggest questions that we're also even asking you tonight is, between a bank and a Sacco, which one do you prefer? Now, for you to actually make this answer, let's take a look at what the whole comparison in 2023 deposits between Saccos as well as the banking sector. For the deposit-taking Saccos, which were about 174 of them, they had 575 billion Kenyan shillings, the deposits at that time. For the non-withdrawable deposit-taking Saccos, which were about 183, 107 billion shillings was the deposits at that particular time. For the commercial banks, as well as NBFI, 39 of them, all combined, they had 5,595 billion Kenyan shillings. And microfinance banks, 42.90 billion Kenyan shillings. That is a comparison. So with all this data, according to the Sacco Supervision Annual Report for 2023, do you prefer a bank or a Sacco? Let's listen to what a number of residents from different parts of the country had to say on this particular question.
Tumeanza kuona vikundi vingi vilikuwa vidogo vidogo vimefikia kwa Sacco. Tunaona hii Sacco sasa imekuwa na nafasi kulingana na vile tunaona maisha kila siku. Ukitaka kuchukua, ukope, upewe kitu, Sacco inakubali kwa rahisi. Kwa hivyo tumeona kiliota kama kwa mambo ya simu, hizi savings, watu wamejua M-Pesa. Sasa Sacco imekuwa rahisi.
Mimi kwangu naweza prefer Sacco. Sacco ni ya maana. Sacco huwa inasaidia mtu kwa haraka. Ukiweza kuwa na shida, ukienda kwa bank na uende kwa Sacco, Sacco wanakusaidia haraka juu watakusikiza kwa haraka.
Kama mfanyabiashara wa bodaboda, napendelea kusave na Sacco badala ya bank. Juu Sacco kila mwaka ukisave vizuri, kila mwaka unapata dividend. kuna ile interest wanakuongezea sasa, wanakuwekea kwa akaunti yako, na hizo zinatumia si za Sacco, ni zako wewe mwenyewe. Sasa hizo hata wakati wote unaenda tu unajitolea, unazitumia venye unataka.
Kwa sasa tuseme ni ile tu ukipata inapita tu, hakuna kitu unaweza sema unaweza hata kupeleka kwa bank ama labda kuwekeza mahali ambacho unaweza ona kitu kikubwa, kwa sababu biashara ziko chini, uchumi vile hujakaa vizuri hivyo sana. Yani tuseme kwa ufupi, mwananchi bado anapata shida ama anateseka kwa sababu uchumi, kila kitu kiko juu.
Sacco na benki. Sacco ni kitu sisi wenyewe tunajiundia, tunakuja pamoja, tunakaa pamoja, tunajenga Sacco ile ya kutusaidia njia ya kinyumbani. Na nikisema upande mwingine ya benki ikiwa vile mimi ni mtu mwenye ajiweze sana, nikiingia upande wa benki nikikosa kidogo tu, masikini ya Mungu mimi yule ambaye ajiwezi, benki itakuja na sengenge, benki itakuja na polisi, waweke samba yangu sengenge, wachukue.
Right, from 1908 up to now, there's just so much that has definitely happened up to 2024. Over 6 million membership base. We've walked through all this. And in case you're just joining us right now, first off, we're going to be having, and we do have Peter Njuguna, who is the CEO of Sacco Society's Regulatory Authority. And the big question that we're asking for you is, between a Sacco or a bank, which one do you prefer? Also, do you have questions for SASRA CEO Peter Njuguna? 22047 is our SMS number. 0793 267 279 is our WhatsApp number. Your feedback is much appreciated. Mr. Njuguna, once more, welcome.
Thank you very much for having me.
For all that particular data that you're taking a look at for the report for 2023, anything that we might have missed?
I think you've done a good job in reviewing the report, and you brought out the picture very well. I think what is amazing and that comes up when you compare the different financial institutions that take deposits, and it's something that we struggle to actually get, is one, Saccos are ordinary persons, you and me, saving. Mm-hmm. So we call those in banking retail deposits.
Okay.
Banks have corporate government deposits, big businesses, so it's not one-to-one comparison.
Okay.
You got to ask yourselves, how much of retail banking are banks doing? Mm-hmm. Because Saccos are essentially in retail banking and MSMEs. So that's an area that we, as an authority, we keep asking ourselves. But currently, the data as published by even for the banking industry does not give us to that detail. So it's not easy. So for now, we are just comparing a big figure, but knowing very well that banks play, I would say, in a different league, especially deposit mobilization.
Right.
Yeah.
On that particular slide where we definitely did a whole comparison on this for the commercial banks and even for Saccos as well, and microfinance.
Right.
For your survey, I mean, these are just numbers that we were looking at, but in depth, talking to the sector players, what were you getting?
I think I think what I note is that Kenyans are, use multiple financial service providers.
Okay.
There is a report that is called FinAccess Household Survey, just got launched in early December 2024. And it actually brings that out, that most of us, we go to the Sacco because it has unique offering.
Okay.
You go to a bank, unique offering, and then digital or even microfinance. So we are multiple banked. That's one reality that we have noted, and that has been supported by a survey that is done. I think this is from 2006, the first edition. We just launched the 2024 edition, 6th edition, and it tells a lot. But I think what is there is that as banks, microfinance, Saccos, as over time with evolution, all of them are growing. Meaning Kenyans, as for their livelihoods, they are putting money in a Sacco for a specific purpose. They are putting money in a bank as well for different purposes.
Right.
So I think, you know, as the economy does well, all of us, you know, it's like a tide. You move, all of you move up, okay? And you can see that gradually. And even the proportion to the deposits, proportion to the GDP, you actually see it continues to grow as the economy grows.
Right.
So meaning all this, what you projected there, are key actors in what we call in the financial sector deposit-taking market, because those are deposit-taking institutions, banks, whether commercial, microfinance, Saccos. They take deposits and convert them to credit to fuel the economic activities that households, businesses are undertaking. Right. Therefore, they become very, very key institutions, and they complement each other. Okay. And that's why you hear saying the ordinary folks are saying, yeah, we own it. You know, we'll be served with a lot of ease, because that is the essence of a Sacco, that we form it to serve us. Okay. We make the bylaws to fit us, whether we are motor, bike riders, it's us.
We're the bosses here.
We are the bosses. When you go to teachers, they are the bosses. But now that you realize that it's a totally different story when it comes to banks, because which is the ownership structure and management is different.
Right.
Yeah.
According to the report, as we've taken a look at, by 2023, membership base of about 6-point-something million.
6.8.
6.8. So first of all, what kind of progress are you expecting? You've definitely said there has been a growth, and we've seen it since 1908, when the first ever, and then all the way when even Africans were able to have them, and then now progressively having Saccos in the country, the membership has been growing. Right. So first off, what do you expect moving forward? And even now, speaking to the millions of Kenyans watching us tonight, and they're wondering, how can I be part of a Sacco? Walk us through that as well.
Thank you. One, we reported 6.84, which is about, call it 30% of the adult population in the country. And I think we are expecting that to upward movement to exceed 7 million. For one, that like the gentleman has said over there, we've seen the numbers, and you'll be seeing that in 2024, that the growth, whereas 2023 we saw growth of slightly below 10%. From COVID, we have seen the growth kind of plummeting, but marginally. 2024, we are noting an upward mobility above 10%, whether it's deposits, whether it's loans, and therefore assets. And that we'll see in the data that can. Now, that now speaks to the membership, meaning that there, as the situation got harder economically for many Kenyans, we note that they found solace in their Saccos, okay? And therefore that, we expect, attracted more people, because when the interest rates are good in the economy, it's easy for you to get facilities from other institutions, but now when things are tight, Saccos rates, which usually are not, don't change drastically, it's easier. So people take flight to Saccos. And that means to save, to borrow, you have to save, and therefore become a member. So we expect that in this year, it will be well, we grew at about slightly under 7%, 2023. But this year we're expecting it could be even, above that 7%.
Right. Yeah. And I know a number of these millions of these Kenyans watching us. They're taking a look at these two types of Saccos. Saccos, the deposit taking, the DT Saccos, and the NWDT, non-withdrawable deposit taking Saccos. Can you elaborate to us what is the difference between these two? If I want to join a Sacco, which one should I be joining and why?
Thank you very much. I think I always advise that you join a Sacco based on your needs and your circumstances. Because what has happened in the Sacco industry, what we are calling non-withdrawable deposit-taking Saccos, are Saccos where you save regularly, and you can only withdraw your money, either borrowing, multiply of your savings, or when you exit the Sacco. The bylaws will provide how you part ways. Meaning your deposits are permanent there. They form the pool, the loanable funds for the members, all of you to benefit as needs arise. And that is historically the model. Every Sacco, even the other DT Saccos, have that product. It's a product. Then now what has happened is that over time Saccos have evolved to now what we are seeing, a full service provider. They are offering the full range of services. Non-WDT, you'll find that they offer savings and credit facilities, period. Okay. Now, to get your money, you'll have actually to get it through another financial institution. But when you go to the deposit-taking Saccos, the deposit-taking Saccos means they take deposit that we call demand deposits, meaning I can put, besides the other deposits I can put my money today, either over the counter or through mobile or depositing the check, and I can withdraw it tomorrow. I don't need to give a notice to the bank. We call them demand deposits. That's why you call them deposit taking, because they are very much like other financial institutions, deposit takers like banks. So therefore, to join, it is you to decide what do you want. Okay. If you simply want to access affordable, competitive rates of, for credit facilities, you joining GOtv will be okay with you. But if you want to access more, where you can also literally get other financial services, including payments, if you're a bank, if you are operating a business, savings daily, or even paying out, you can actually do that, because today Saccos have payment solutions, whether it's checks, RTGS, mobile payments, they have all that. So it's very much what you want that you'll be able. Just like other financial institutions, you actually go, it is your need that takes you there. So you need to understand your circumstances, then you don't look at rates they are paying and all that. Is very much your need that you drives there. Yeah. Now and therefore to join is very easy, because you need to, most Saccos to become a member, you have to apply to be a member. And to join, it means there is requirements like regular savings, and through which also entitle you to a range of services that you can access, and you also have rights and obligations, because you are a member. Yeah. So, but joining a Sacco is so much easier. Today, there are some Saccos you just go to mobile and attach your ID, other documentation to identify you, and you become a member.
Is there a least amount of money that I need? And I'm really asking this on behalf of so many young people out here who say, I'm unemployed, I don't have any job that I'm doing, so how am I joining a Sacco? Actually, that's why I said your circumstances will dictate. You and the gentleman who interviewed there, you could hear them speak. If it's a border, when they form their Sacco, they'll say, we'll be saving 100 shillings daily or 50 shillings as per their ability. We go to Mama Boga the same way. They'll say, no, I'll be saving 50 shillings. Now, other employee-based, like say, as you might say, I'll be saving 2,000 every month. And what we are noting, some of the Saccos, actually, the people who save daily, you might end up saving actually more, because I mean, the thing is, the 100 shillings you're paying per day, is the minimum. But you are free to save 200 depending on your business that day. But there are other Saccos where it's monthly, because I'm relying on employer to deduct and remit, meaning employer cannot be changing every month. Administrative is very costly. But when I have the control, I can push that money. And I think that's why understanding, you don't go to a Sacco where they are saying, to be a member, you must be saving minimum 5,000 a month, because they exist. You go to where your economic circumstances and maybe your needs dictate. Yeah. As a regulator, what do you sit on the kind of discipline that these Saccos have? As of 2023, telling us that 359 Saccos, this was in 2022, there were about 359, 2023, 357. So 1 year, about 2 of the Saccos dropped. You can also tell us why. But the kind of discipline in some of the Saccos, because we have had, even in the media, some of the Saccos, their management, fraud as well. Tell us about that as a regulator. Thanks very much, Stanley. One, I have to say this. Saccos are customer-owned financial institution or member-owned. So we are the one who run it. We are the one who actually elect, manage, and all that. So I think, and that's the challenge we constantly give to members, because you are the first line of oversight. So, and therefore, as challenges come, you'll actually relate that to the membership, what role they actually play. And therefore, our job as a regulator is to make sure that the institution is governed prudently. And therefore, that's why they are operating financial standards, operating standards, which we enforce, whether by way of capital, by way of liquidity, discipline in loan repayment and the like, so that by the time institution, now that gives a framework, the rail guards within which members should actually manage their Sacco. However,
like in any business, you'll find there are people who will always, for reasons of their own making or not their own making, you find that the business may experience difficulties. And that's what you are actually noting. I would not say what you are noting there exiting is not necessarily mismanagement. Sample this. In the media industry, we have seen a lot of changes now, and you find that the institutions, then people exit, go more and more independent. Now you find if the Sacco does not then invest in actually how do we give offerings to this kind of market to keep, the members, so they can save and they can continue patronizing our product. You realize that you'll be sitting there and you are losing members, and they are going to those Saccos that are offering, they are more responsive. So we have seen Saccos due to competition. You'll note through a report that a lot of Saccos that were, for example, public sector Saccos that were, for example, let me use the case of teacher-based Saccos. You'll find that they used to be called, say, Nakuru teachers, for example. Okay. Today, they have a name that does not necessarily define, give them identical teachers. Yeah. So Kenyans are joining them because of service. So the competition is across the board. So Saccos that you find dropping is actually revocation of license and then closing business. And some of them actually write to us that we are closing, we are refunding members' deposits. Others, because of non-compliance with the requirements, licensing requirements, we actually close them.
What are these requirements?
This requirement, one, the license requirement, one, you need to have capital. Okay. And for your information, the Saccos that we regulate, the 357 is just a small proportion, even though they control, about 90% of the total assets in the Sacco industry. There are other Saccos that we do not regulate, the small ones. The one they are being nurtured under county oversight of county government. We take 100 million in deposits and above, meaning that you have built a sizable, loanable fund by way of deposits to sustain yourself. So in that case, we look for capital. Have you built capital? So minimum 5 million for those non-WDT and 8% of your assets. Right. So there's a correlation there, meaning you have to have the discipline to make money and retain some, even as you distribute. 2, liquidity, sustained liquidity of 10% for non-WDT and then 15% for DT. For deposit-taking Saccos, capital is 10% of their assets. If you have $1 billion in assets, you need no less than 100 million. In capital, and liquidity, you have to sustain that 15% liquid cash, by way of investments that are in money market and the deposits that are near cash. So now, and then quality of your loans. Right. Operational standards, you need to have a system that is auditable, you can trace transactions. Then there is a whole bunch of other requirements that you have to observe. So that is why they have to file returns with us every month. We analyze that data, we engage them and advise them where they need to improve. And when you find an institution exiting from licensing regime, we have possibly engaged them for not less than 2 years. Right. And we want the members to actually respond to these inadequacies. Right. Because there are ways and means regulatorily how we deal with them. Okay. By the time you are saying no, it means you are literally unable to turn around.
Most definitely. Someone would wonder why we're using 2023 report. Maybe a quick one. When are we getting the last year's whole report about Saccos?
Thank you for that question. What happened is that the data we publish at the end of their annual report is based on the audited financial statements. Right now, Saccos, they just started auditing and they close their books by end of this quarter. We need to get that data. AGMs are held, then we analyze for another 3 months. So by June, usually the report is ready. Right. And by July, we are ready to release it. Okay. So usually that's why there is a lag, but we do release other, intermediate data. Like that's why we are able to know, for example, that by end of November, we had, you saw about 758 billion in loan portfolio. We are talking of 835 billion end of November. Right. So we already have that data. We release it on a basis. Yeah. Right.
Peter Njuguna, thank you very much. CEO of Sacco Society's Regulatory Authority. Thank you very much. Murimi Eric says, bank, it is more secure than Sacco. In form of security, you might wake up in a day and find the Sacco is not existing anymore. Secondly, it is growth, very slow. Thank you very much for all your questions. I've been throwing them to Mr. Njuguna. Thank you very much for being with us. Catherine Simaloi has been on the Sign Language docket. I'm used to Stanley Nyeringita. We do this once more, another time. Arsenal fans, I hope you're ready for tonight's game.